Hello everyone, this is Tejashwini. In this video, let's discuss about the RTP September 2024. Okay, the first question is a case scenario based question. First, let's look into the question and then we'll solve the MCQs one by one. Okay, Mr. Naveen, aged 40 years, is engaged in manufacturing business. He follows mercantile system of accounting very well. The details pertaining to his business are given. Fine. Capital receipt information is given. Turnover information is given 2.8 crores. Amount received in cash out of turnover, that is this amount which is received, cash receipts, is 8 lakh out of this 2.8 crore. Amount received in cash out of this capital receipt, see, the capital receipt is 2 lakh rupees out of this 1.2 crores. Okay, the amount received through an account pay, check, NEFT, and other prescribed mode, basically through banking channels, is 2.5 crores. And the total payment which they have made is 1.6. Cash payment out of the total payment is 9 lakh. That is 9 lakh out of this 1.6 crores. The net profit as per the P&L, that is as per the books of accounts, is 10 lakh 50,000 rupees. An analysis of profit and loss for the year ended 31st March 2024 revealed the following information. That is, the salary includes the wages of 15,000 rupees per month paid to one security guard and two housekeeping staffs in cash. Other administrative expenses include 70,000 paid in cash, payment in a day less than 8,000, interest charges, that is which is paid to Mr. Kamal, 70,000, where TDS has not been deducted. Fine. Let's look into the solution part first. So, on the basis of the question which is given below, we have to choose the appropriate answer to question 1 to question 5. Okay, let's discuss the question in a detailed way. See, first of all, what have they told? They have given information about the turnover, they have given information about the profit and loss, and also the certain disallowances need to be provided, and certain disallowance need to be added back, and this information have been provided. Certain expenses have to be allowed. So let's look into the first question. Is Mr. Naveen eligible to declare income on presumptive basis? Presumptive basis, please. Section 44 AD. They are speaking about the section 44 AD here. Everyone, they're speaking about what? They're speaking about section 44 AD, which is basis under the following provisions of the Income Tax Act 1961 for AY 24-25. See, people, point being very simple. They're asking whether this fellow Mr. Naveen, who is doing the business, who is aged 40 years, is he eligible? Is he eligible for presumptive taxation under section 4480? Tell me the basic provisions under section 4480, people. Recall. Section 4480 states, if your turnover is up to 2 crore rupees, then you can take the section 4480, then section 4480 can be applicable. And then if you're stating your income under section 4480 through the banking channels, it will be 8%, and apart from the other, in any other case for that matter, it would be 6%. Correct? See, here you can see the turnover is 2.8 crores, people, which is more than 2 crores. But in PY 23-24, they have stated, in PY 23-24, there is an amendment wherein they have stated 2.8 crores, that is up to 2 crores, the turnover, whatever provisions we have stated is fine. It's correct only. But there's a provision which is inserted under this section, which states, if your income, that is whatever the receipt which you are getting, whatever the money which you are receiving from the turnover, whatever the money which you are receiving from the turnover, if it doesn't exceed the cash which you are receiving from the turnover, if it does not exceed 5% of your total turnover, then you can consider the 2 crore criteria to be 3 crore. That is, your concept was 2 crore, up to 2 crore rupees. If you had, you could have opted for 2044 AD. If it was 2.5 crore, you couldn't have opted. But this provision which is inserted, that is, this 2 crore would become 3 crore. 3 crore would be replaced by here, this, in the place of 2 crore, you will replace this 3 crore only and only when your total receipt, whatever you had, cash amount, whatever you had, if it is up to 5%, does not exceed 5%, means if it is up to 5% of your turnover, cash payment. People, cash receipts, it's not payment, it's just the receipt which they are speaking. The money or the aggregate of the money which you're receiving in the PY, if it does not exceed 5% of your total turnover, then what is the point? This 3 crore will be in place of this 2 crore. So now let's see, if you do 8 lakh divided by 2.8 crores. If you do the math, how much would you get? People, if you do the math, 8 lakh divided by 2 crore 80 lakh. How much would you get? You will get only some 2.85%, which is less than 5%. No? So, this point of whether Mr. Naveen is eligible under Section 44 AD, yes, he is eligible. He is eligible because of what reason? So, no is not an option. Yes is the option. So, these two. Now, we have come to 50-50% chances. Don't jump to write the solution directly. Just read, array, read this option B, read this option D and B and C, whatever is there. Read the option, whatever is there. Don't jump and solve. Go to the solution. Read the question. So read the solution. Yes, since the aggregate cash receipts during the year does not exceed 5% of the total amount received. Yes, since the amount received in cash during the year does not exceed 5% of the turnover. Now we will be like, "Arey, both the options look similar." People, these are two different points which they are stating. See, this is the total amount received which they are speaking in point B, and point C is giving the explanation of the turnover. And this point of 2 crore being replaced by 3 crores, and 5% of the amount cash receipts which you are receiving should be up to 5% of the turnover. Turnover, not the total amount, turnover. If that is the case, yes, you can opt for 4480 because it is the cash which you are receiving is less than the 5%, does not exceed 5% of the turnover. So the option C is the correct answer. Clear? Makes sense? So what would be your answer to MCQ 1, assuming for the purpose of answering this MCQ? See, try to understand the question which they have given. What would have been your answer for MCQ 1? What you would have considered as the answer for MCQ 1 if you would have assumed for this MCQ, and the same thing pertains to the MCQ 3 also, that Mr. Naveen had additionally received rupees 10 lakh by way of crossed check out of turnover during PY 23-24. People, whenever we are speaking about the banking channels, it means account pay check, account pay draft, any other electronic clearance mode. Any check other than account pay check would be considered as similar to cash only. So cross check, I would determine it as cash. Cross check, I would state it as cash only. So now, Mr. Naveen has additionally received 10 lakh rupees means I would consider not 8 lakh rupees as cash now. I would consider I would consider 10 plus 8, 18 lakh rupees as cash. Correct? I would consider how much? 18 lakh rupees as cash. Now do the math. 18 lakh divided by 2.8 crores. How much is the percentage? You will get the percent 6.42, which is excess of 5%. Cash receipt which has been received by you is exceeding 5% of your turnover. So now this point of 3 crore rupees to be replaced by 2 crore, this point itself is not applicable. Now the base provision is applicable, wherein if your turnover is exceeding 2 crore rupees, then you can't opt for 4480. If it is up 2 crores, only and only then you can opt for 4480. Clear? It is 2 crores. Huh? So now your answer is 2 crores only. Okay, now we will look into the option. Can he opt for in this MCQ? No, he can't. So, no, since the turnover exceeds threshold limit of 2 crores, no, that is not the point. No, since the turnover aggregate cash receipts during the year exceed 5% of the turnover, we'll keep it on hold. No, since the cash payment during the year exceeded 5% of the turnover. No, due to A and B. That's the one point. Okay. See here, that is option B, no, since the aggregate cash receipt during the year exceed 5% of the turnover, note the cash payments during the period. People, what would be your solution? Here in this question, there is another explanation which we need to consider. Cash payment. How much is the cash payment that they are considering, people? Cash payment is 9 lakh rupees. 9 lakh out of 1.6 crores. Do the math. 9 divided by 1.6. 9 lakh divided by 1.6 crores. Do the math. How much would you get? 9 lakh divided by 1.6 crores. How much would you get? You would get 5.625%, which is excess of 5% over here. So because of the since the aggregate cash receipts exceeds 5% of the turnover, and the cash payment during the period exceeds 5% also, hence this point A and B, that is because it exceeds the threshold limit of 2 crores, and also during the period exceeds 5% of the turnover, these two would become the option, that is option D. People, option C is correct only. I just explained the option C so that you would understand the cash payment is also exceeding 5%. That understanding will get into in the next MCQ. But try to understand a point over here. Since your turnover exceeds 2 crore, that is one of the option. And also since the aggregate cash receipts during the year exceeds 5%, that's been the second point. Because of these two reasons, he is not able to opt for option. That is, he is not able to opt for is not able to opt for section 44 AD. Clear? Is not able to opt for section 44 AD. That is because of option A and B. That is option D. Is Mr. Naveen required to get his books of accounts audited during the PY? So now the point which I told about the cash payment and the cash receipts would come into picture. If you remember, if you want to get your books of accounts audited, that section which would be applicable is section 44 AB. If your turnover exceeds 1 crore rupees, then your you have to get your books of accounts audited for business. If it exceeds 1 crore, and this 1 crore would be replaced by 10 crore, provided you satisfy two conditions. What are those? If the cash receipts, whatever you are paying, that is the cash receipts, whatever you are receiving, should be, that is, it does not exceed 5% of your total turnover. And the cash payments which you are making should not exceed 5% of the turnover. These are and clause. So both conditions should be satisfied. We just saw the cash payment which has been made. If you do the math over here, you'll get some 6.42% or something, which is more than 5%. That's the one option. And here, if you consider for the MCQ 2 and MCQ 3, you should add this 10% more. So it is going to be resulting in more than 5% only. If considering both the options in place, see, no, since the turnover of Mr. Naveen does not exceed the threshold limit of 10 crore, but you have to consider this cash payment and the cash receipts option. No. So it is that he can't get, that is, he has to get his books of accounts audited because of certain reason. What reason is that? Try to think. 2 points: cash receipts and cash payments. See, is he liable to get his books of accounts audited? Yes, certainly. Yes, since the amount received in cash during the year exceeds 5% of the turnover. It's not just about cash amount received in cash, it should be cash receipts, which should be mentioned in the question very clearly. See here, cash payment they mentioned. Similarly, they should have mentioned here in the question cash receipt. Have they mentioned cash receipt? They've just mentioned amount received in cash, which means it would consider this also, turnover also, capital receipt also. We are speaking only about this payment. We are not speaking about, sorry, we are speaking about only this receipt, not this receipt. So in the solution, it to confuse you, what they have stated is, yes, since the amount received in cash during the year exceeds 5% of the turnover, you will be so happy. You will not get into option C only. Why? Hurry. First of all, you have to get your books of accounts audited. Yes, because your cash receipts are exceeding 5%. You'll jump and you'll tick in this option. But this is not the option. This is the answer. Why? Because they have stated amount received in cash, not mentioned specifically cash receipt. If they would have mentioned in the question cash receipt and cash payment, they would have given in the option D, both B and C, like how they have given in this question, due to both B and C. Then you would have written B and C. Here, amount received in cash is given, people, not cash receipt. See, please be careful with these sort of points in your solution. Okay. Since the cash payments during the year exceeds 5% of the aggregate payment, yes, this is considerable. We'll look into the next option also. Don't jump. We'll look into the last option as well. No, since the amount received in cash during the year does not exceed 5% of the total amount received. Again, they're speaking about the total amount, they're speaking about the cash, but no is not the answer. So, what is your correct answer, people? C is your correct answer. Clear? So, what is the amount of the profits and gains of business chargeable to tax in the hands of Mr. Navin as per books of accounts? Okay, as per books of accounts, how much have they given? Please look into the question. 10 lakh 50,000. So they have given certain point P&L they have given and revealed following information. We have to see whether it is allowed or disallowed. If it is disallowed, we have to do the computation as per PGBP. Simple as that. Salary includes wages of 15,000 per month, each paid to one security guard, two housekeeping staff in cash. Each paid to one security guard and two housekeeping staffs in cash. See, salary includes wages of 15,000 per month, paid to one security guard and two housekeeping in cash. Govinda. Because if you're paying it in cash, people, you can pay up to 10,000 rupees. If it exceeds 10,000, then entire amount will become fully disallowed under section 40A3. Remember? Now, this 15,000 rupees multiplied by 12 months multiplied by 3 security guard, you are paying that is every month you're paying cash in single day to a single person. 15,000 excess of 10,000 is disallowed. So now what you will do, the entire amount of 5,40,000 rupees whatever you would get, you would add back because it is disallowed. Other administrative expenses include 70,000 paid in cash. Payment in a day is less than 8,000. See, the provision states per day per person. If you're paying in excess of 10,000, it is going to be disallowed. No? But here it is just paid less than 8,000 means it is allowed. This is allowed. So you need not do anything. Interest charges includes loan payable to Mr. Kamal. TDS not been deducted. So 70,000 it is paid to Kamal. It is for a resident. For resident 70,000 into 30% will be disallowed. So it is resulting in 21,000 will be disallowed. We will add back. So now you do the math. 10 lakh 50,000 plus 5.4 lakh plus 21,000 if you do, how much would you get? 10 lakh 50,000 plus 5 lakh 40,000 plus 21,000 if you do, you'll get 16 lakh 11,000, which is option B is your answer. Clear? You can see over here also. The detailed point is done here. Net profit as per P&L 10 lakh 50,000. Salary to staff section 48 to 50,000 into 12 months into 3 staffs 5 lakh 40,000. TDS not deducted 30% being disallowed 21,000. 16 lakh 11,000 is your answer. Clear? If you want the notes which is written over here, handwritten note along with the other direct tax related notes, you can get that in my Telegram channel. The link is provided in the description. You can get the free resources. What is the amount of the PGPP chargeable to tax in the hands of Mr. Naveen if he does not want to get his books of accounts audited? So, what is the amount of PGBP chargeable to tax in the hands of Mr. Naveen if he does not want his gets books of account audited? Means he is speaking about section 44AD. Under section 44AD, people, how much is the turnover which they have mentioned? 2.8 crore. If you can see, 10 lakh which need to be added was for this MCQ and MCQ 3 only, not for other MCQs. So your basic answer, your basic solution would be how much? 8. This 2.8. 2.8 crore. Out of this 2.8 crore, 2.5 crore is through banking channels. Remaining 30 lakh is from the normal cash in the modes of cash. So if you're considering the same, out of 2.8 crores, 2.5 crores considered in banking channel, remaining 30 lakh considered in other channel. So 6% is the income which to be considered as your PGBP income under section 44AD, that is 50 lakh, and 30 lakh multiplied by 8%, 2.4. The total is coming up to 7 lakh 40,000, and the answer is option A. Clear? Great. Mr. Sarika, an Indian citizen, is in employment with an overseas company. Okay. She's in employment basically. located in UAE outside India. She's not liable to pay tax in UAE. She's not paying any tax over there. During the PY 23-24, she comes to India for 121 days. Here, you need not calculate anything. You have just given the question, they have just given the point very clearly. 121 days. She was in India for 50 days and 100 days and 76 days and 145 in the respective financial year 1920, 21 22, 20 21, 21 22, 22 23 respectively. Her annual income for the previous year 23-24 is as follows. Salary accrued or arisen in UAE is 15 lakh. Income accrued or arisen in India is 2 lakh. Income deemed to be accrued or arisen in India is 7 lakh. Income arising and received in UAE from the business setup in India is 5 lakh. Life insurance premium paid by check in India is 1 lakh. Mrs. Sarika has opted out the default tax regime under 115 BAC. Very well. You are required to determine the residential status and the total income of Mrs. Sarika for 24-25. What would be your answer if income arising and accruing in UAE from the business setup in India is 10 lakh instead of 5 lakh? In continuation to point number 2, what would be your answer if Mrs. Sarika comes to India for 45 days instead of 145 days? Clear? Okay. See, first of all, what have they asked? What is required? You are required to determine the residential status of the total income of Mrs. Sarika for AY 24-25. Clear? They have to determine residential status and the total income very well. First of all, she is a Indian citizen and she's working in employment. If she's an Indian citizen and if she's working in an employment for that matter, you have the provisions which in states Sarika, she's an Indian citizen and employment in UAE. She comes for a visit to India and a stay for 121 day and a stay is how much? In the last four preceding years is total of 371 days which is exceeding 365 days. But wait, here you need to consider a point wherein she's coming Indian citizen, she's coming on a visit during the PY and here, if her total income other than foreign source income, if it is exceeding 15 lakh, then some other provision is applicable. If she's not getting into that point, then the basic provision is applicable. What would be the point here? See, whatever the salary which is accrued in UAE, it is foreign source. Hence, it is excluded. What are we trying to calculate here? We are just calculating how much is the total income excluding the foreign source income. Is it exceeding 15 lakh or less than 15 lakh is the See, income accrued and arised in India is 2 lakh. Income deemed to be accrued and arised in India 7 lakh. Income arising in UAE from the business setup in India, as this is set up in India for that matter, it is an income, Indian income. Set up in India, the control is in India, so it is controlled in India, it is Indian income. Total is 14 lakh. But she has the Chapter 6A deduction wherein she has paid the life insurance premium which is allowed as deduction for her 1 lakh rupees is the deduction allowed, so our total income is 13 lakh. Can I say it is not exceeding 15 lakh? As it is not exceeding 15 lakh, our provision point whatever we have seen is not applicable for her. Our basic provision point is not applicable for her. Now base provision is applicable, that is if she is moving out for an employment, if the person Indian citizen basically is moving out of India for the purpose of employment outside India, only first basic condition is applicable. That is, if she stays in India for a period of 182 days or more, she is considered to be a resident. If not, she is considered to be a non-resident directly. So, hence, what happens? As she is staying for a period less than 182 days, that is 121 days in our point, she is a non-resident, treated as non-resident directly. Clear? What have we done here? I'll give you a very quick summary. Here, first of all, we are calculating the residential status. In order to see the point, if she's an Indian citizen or Indian origin, comes to a visit for a person for a resident that comes for a visit in India during the PY, if her income is exceeding 15 lakh rupees, then some other provision is applicable. That is, she should have stayed for 60 or 120 days instead of 60 days, and the first basic condition being the same. The point you remember, people? That point would be applicable if her income was exceeding 15 lakh. As her income is not exceeding 15 lakh here, you're keeping the point very simple. The base provision is applicable. That is, stayed for 182 days or more resident. Not stayed. She's directly going to be treated as non-resident. Clear? Done. If you want the more detailed understanding of this residential status, it has been provided in the residential status revision classes. You can go and watch over there. So now salary accrued or arise. Now what are we doing is that a total income. Now we have determined a residential status. She is a non-resident. Now what are we treating? We are looking into the total income. So salary accrued or arised in India from foreign source, non-resident, foreign income, not taxable. People, please remember, Indian income taxable, Indian income taxable, and again business set up in India, business controlled or set up in India. For RNR it would have been taxable, for ROR it would have been taxable, but for non-resident it's not taxable. Hence our GTA is 9 lakh, deduction of 1 lakh rupees is available for even for resident or non-resident if it is paid. So hence it is 8 lakh rupees. Our total income is 8 lakh. In the second point, what have they stated? What would have been your answer if income arising from UAE from the business setup in India is 10 lakh instead of 5 lakh? If if it would have been 10 lakh instead of 5 lakh, then what would have been the point is that your total income, that is income other than the foreign source income, would have been 18 lakh. Now the provision would have been you should have stayed for 182 days or more, or in the last 4 PY you should have stayed for 365 days plus 120 days. That would have been the point. As she had stayed in the period for more than 120 days, that is that she has not stayed for 182 days, that first basic provision is not applicable. The second base provision of 365 days, wherein you have to stay for 365 days for last 4 previous year, and you should have stayed for 120 days for the last PY, this condition would have been satisfied and she would have become resident in India. But there would be a situation wherein she has stayed for a period more than 120 but less than 182 days. She would be automatically treated as RNOR even without looking into the additional condition. She would have been treated as RNOR. And in such case, income arising and received in UAE from this business setup, whatever she has done, would have been 18 lakh. Why? Because this amount which has been excluded as the total income, this amount would have been included and the total income would have been 18 lakh. He would be liable to pay the tax of 18 lakh. Clear? Now, there's another point. In continuation to point to what would have been your answer if Mrs. Sarika comes in India for 23-24 for 45 days instead of 145 days. She has stayed for 145 days here, no? Instead of that 145, if she has just stayed for 45, what would have been your point is very simple. Mrs. Sarika, when she comes to India for 45 days instead of that, she would have not been a resident because she would have stayed for a period of less than 365 days in the last 4 PY, which is not accepted. And her foreign source income would be 18 lakh. Okay, fine. She has exceeded 18 lakh for that matter. And she would not have become, that is, however, since she is an Indian citizen, having total income of 18 lakh, exceeding the threshold limit of 15 lakh, and she has not been taxed in any other country, she would have become deemed a resident. Clear? A deemed resident would always be considered as not as ordinary resident, and the total income would have been 18 lakh as computed in the point number 2 below. Sorry, 2 above. I hope it is clear. So, Mr. Anshul, a salaried employee, question number 7 in your RTP. Mr. Anshul, a salaried employee in a private company, furnishes you the following information for the year ended 31st March 2024. The basic salary is given 75,000 per month. From 1st December 2023, basic salary increased to 85,000 per month. DA at 50% of the basic salary, 40% of the DA forms part of the retirement benefit, entertainment allowances given. PF contribution is being provided, professional tax information given, HRA information given, house conveyance is given, loan from the employer information is given, free education is given, leave travel concession is also given, compute the taxable salary of Mr. Anshul if he has shifted out of the default tax regime under section 115 BAC. People, point being very, very simple. Let's break down each point of the question. See here, my basic salary is 75,000 per month from 1st December 2023. Basic salary increased to 85,000 per month. So point being very simple. For how many months? December, January, February, March. 4 months. He has got 85,000 into 4 months. So for the remaining 8 months, 85,000 into 75 75,000 into 8 months if you do, you will get the basic salary amount, that is 9,40,000. And the DA, whatever given in the questions, the DA 50% of the basic salary. Whatever is your basic salary, that 50% is nothing but your DA. That you would compute the same in your computation. Next, entertainment allowance of how much? 10,000. 40% of DA forms part of the salary for retirement benefits. Entertainment allowance is how much? Entertainment allowance is 10,000 rupees. What do you mean by this entertainment allowance? Is it taxable or perquisite? Is it a perquisite or is it an allowance? Bhagavanta, this is allowance. So it is going to be 100% taxable. In case of perquisite telephone facility given by employer to employee, it will be exempted, people. But here in this case, it's going to be taxable. So entire entertainment allowances is taxable. 10,000 per month. Next, what is the information given in the question? Contribution of employer to RPF of the employee of at 18% of the basic salary. Employees also contribute the equivalent amount. Tell me the provision, people. Contribution by employer to RPF of the employee. To RPF of the employee. So, in case of RPF contribution made by employer to employee, excess of 12% of the basic plus DA would become taxable. Excess of 12% of basic plus DA amount combined on the 12% excess of that, whatever the employer is contributing, would become taxable. And here employees also contributing the same. Employees contribution, that doesn't make any point that to be taxable over here. So we are concentrating on employer. Employer contribution to RPF, remember, whatever the contribution which the employee has made, that will be considered as reduction under section 80C in case he has opted out of default tax regime. Okay. Now, see here, employer's contribution to RPF, first of all, 9,40,000. On the basic, this fellow is paying 18%, which is nothing but 1,69,200. And what is exempted is up to 12% of the basic plus DA. 9,40,000 rupees is the basic, correct? 4,70,000 rupees out of that only DA in terms would be considered for the purpose of calculation. 40% forms part of retirement benefit. So 40% of this amount plus this amount, the total of 12%, which is 1,35,360. This total of this is combined. You have got this amount 11,28,000, and on that 12% is 1,35,360. How much is that? This minus this 33,840 is taxable amount. Clear? Now, professional tax paid 2,200, half which 1,800 was paid by the employer. This is the common adjustment which you can see in majority of the question people. Remember, whenever the professional tax is being paid by the employer, that would become your taxable amount first to the extent of employer paid. Then you will take the deduction of both employer and employee professional tax paid. As this is paid by the employer, what you will do first is 1,800, you are going to add it first. First, you are going to add 1,800 in your professional tax paid by the employer. Then you are going to take the entire amount as your deduction. That is the entire 2,200 as your deduction. Clear? House rent allowance of 16,000 per month. He paid rent of 17,000 per month for accommodation in Meru. HRA of 16,000, and you also paid rent of 17,000. How much is the HRA which he has received? 16,000 per month. He paid rent of 17,000 per month in Meerut. Is it a metro city or non-metro city? It's a non-metro city. So how would you do the calculation of the HRA, people? First of all, HRA, how much ever you have received, that is 16,000. 16,000 per month multiplied by 12 months. How much should you get, people? Same only, no? 16,000 multiplied by 12, 1,92,000. So out of this 1,92,000, least of the following would be considered as exemption under section 1013A. That is, what is the HRA received? Okay. What is the rent paid? 70,000 per month multiplied by 12 months. If you do, you will get 2,04,000 minus 10% of the salary. Salary for the purpose of HRA would be basic plus DA in terms plus the turnover commission. Basic. There is no fixed percentage of turnover commission given in the question. So basic plus DA in total you will get 11,28,000. How did you get 11,28,000, people? If you do this math, the basic plus DA in terms 11,28 only, no? The same thing you have got here. I hope all of you have understood, people, because this is something which we are doing RTP. Do solving of RTP means you have already done the majority of the question and you already know how to solve, and you're looking into it for a clear idea of the steps. Clear? That is why I'm not writing salary so much. I'm not writing and explaining. That is the reason. In the regular classes, we would do the writing and solving the question. This is the RTP. The intention is to save as much time as possible and get the concept as quick as possible. Clear? Great. 11 lakh 28,000 multiplied by 10%, you will get that 91,200. 40% of the salary by you're taking, not 50%, because it is a non-metro city. Metro city means 50%, non-metro city means 40%. 40% of the salary, 11 lakh 28,000 into 40%, you will get 4 lakh 51,200. Least of the following would be considered as exemption. That is 91,200. 1 lakh 92,000 minus 91,200. You would get 1 lakh 800. 1 lakh 800 is your taxable HRA, which you would consider, and would be the clear. Conveyance allowance of 1,500 per month by the company towards actual reimbursement of conveyance spent on special duty. What is it? Conveyance allowance of 1,500 per month. It's going to be to the extent of actual reimbursement made for the official purpose. Or why is that? Why will that be taxable for me? Yeah, it is not at all taxable for me. No. So 1,500 per month multiplied by 12. That is going to be exempted amount. Conveyance. Why will the conveyance be taxable? As it is an actual reimbursement for the official work. It's not for my personal work. Making sense. Loan of 2 lakh was taken from the employer on 1723 for medical treatment of his brother, that is tuberculosis. Interest charge was 5%, interest on outstanding wasn't so much, no medical insurance has been taken, SBI interest rate is 11%. People normally speaking, the excess of the whatever the SBI interest amount minus whatever the interest which has been charged by the company, the differential interest amount would be the concessional interest loan, that is interest concession, that would be subject to tax. That interest amount would be perquisite. But yeah, as it is taken for the purpose of severe disability, that is for some tuberculosis or for some from disease, like for that matter, it is going to be considered as tax. It is going to be considered as tax-free perquisite. It is going to be exempted. So interest, in case interest on loan, it is not a perquisite since the loan for medical treatment is for the brother of tuberculosis, hence it is not taxable. Clear? Next, free education was provided to the sister of Mr. Anshul in the school maintained and owned by the company. Cost of such education is 900 per month. No amount was recovered. So remember, if any education which is given for the employee's children up to 1,000 rupees studying in the employer's own hospital, own school, or employer own college, tied up college, then it would be exempted. But in this case, it is the relative who is studying people. Free education is provided to sister relative. Hence, it is not going to be exempted. It is going to be fully taxable. That is 900 rupees per month into 12 would become fully taxable amount. Clear? It would become fully taxable amount. Next, leave travel concession given to Anshul, his wife, and three children. One daughter aged 6 and the twin daughter aged 4. Cost of the air tickets in economy class reimbursed by the company is 20,000 for adults and reimbursed 25,000 for children. Anshul is eligible for availing the exemption as permitted. In case of LTC people, remember LTC exemption is available for the flight, for the traveling for that matter, to the extent of 2 children and himself and his spouse. But in case of children, 2 children will be applicable when the first born is twin and the second born is one child. It would be maximum of 3 children when the first born is one child and the second born is twin. In that case, the maximum exemption is available for all the 3 children, and his 45,000 rupees expenses, whatever he has incurred, is going to be exempted for all. Hence, it would nothing is taxable over here. If you add everything, you will get the exemption. Let's compute the taxable salary of Mr. Anshul if he has shifted out of the default tax regime under section 115 BAC. Clear? In this case, 15 lakh 67,000 240 is the point, and he has paid the professional tax. We have already considered standard deduction under section 16 is available up to 50,000 rupees. It's available, and the taxable salary for that matter is 15 lakh 15,040. They have not asked you to calculate gross taxable income. They just asked you to calculate the taxable salary. So we are not taking the aspect of deduction under section ATC and all. Clear? So, Karan, a resident aged 50 years furnishes the following information in the year ended 31st March 2020. Salary, gross is so much, income from LOP, that is let out property, interest on loan paid for self-occupied property, interest income from sale of rubber bands for rubber products from rubber plants, business income, retail business, business income, wholesale business, brought forward business loss. Dividend received from ABC Limited, an Indian company carrying on agricultural operation. LTCG from sale of listed equity shares. STCG on sale of shares, lottery winnings, gross, contribution to the Provident Fund, and income from income of minor son Raju from special talent, interest from the bank received by Raju on the deposit made out of his special talent. Compute current total income under the default tax regime under section 115 BAC, assuming the wife does not earn any income. So they are expecting you to do 115 as per 115 BAC. Okay, the gross salary they have already given in the question, 2,75,000. So now you can give the standard deduction. Is it available under 115 BAC? Absolutely yes, it's available under 115 BAC. Minus 50,000 if you do. How much is the income from salary that you would get? 2,25,000. 2,25,000 is recorded. And under income from house property, you already have loss from LOP. But remember, 115 BAC, interest on loan paid for self-occupied property is not allowed as deduction. Hence, you cannot consider the same. 2,85,000 loss, whatever you have, that will be carried forward to the next assessment year. And also, interhead adjustment, interhead set off of losses is also not available under the 115 BAC. Now, the next point is income from sale of rubber plant from rubber is 2 lakh rupees. So, how much is it going to be? Out of this total 2 lakh rupees, 35% is the business income, remaining 65% is the agricultural income, which is exempted. This income is exempted, so not taxable. So, the 70,000 becomes taxable. Business income, which is the retail business. What is it? Business income, which is the retail business given in the question 1,20,000. It is going to be taxable. Next, business income, which is the wholesale business. Here there is loss. And in case of loss, always remember this loss of 1 lakh rupees, which you need to set off from the other business income. Other business income, you can set off these losses. Only specified income, specified losses can be set off against specified income. Apart from that, other incomes you can set off from your other PGBP. Other loss from PGBP can be set off against your income from PGBP. And you have brought forward business loss also to the extent of 90,000 rupees. You had the point. So to the extent of 90,000 rupees, you can set off. Okay. People remember 1,90,000 is the total of 70 plus 120. Total you have considered out of that 1 lakh. Current year business loss, other business loss you have set it off. Only you had income till 90,000 rupees which you can set off. To that extent of 90,000 which you have set it off, so out of 1,35,000, which is the brought forward losses which you have, out of that 90,000 rupees you have subtracted, 45,000 will be carried forwarded to the next assessment year 25-26. Clear? Now, dividend received from the ABC Limited, an Indian company carrying on agricultural operations, is 13,500. This is going to be taxable. That is dividend received from the ABC Limited. This is going to be taxable under the head income from other sources. That is dividend income. Whatever they have given to that extent, it is going to be net of your TDS. So the total amount is going to be 15,000. Grossing up is what you're doing. 13,500 is representing 90%. How much is 100 then? That is 15,000 rupees. Clear? 15,000. Next, long-term capital gain from the sale of equity shares. LTCG is how much? 2 lakh. You have STCG loss. Can you set off STCG losses against your LTCG income? Absolutely yes, you can set off. That is 2 lakh minus 1,10,000 rupees. You can make the set off of the same. Short-term capital loss against your long-term capital income. That differential amount will be your capital gain. Clear? Next, lottery winning gross they have given themselves. So 45,000 directly are going to make it as taxable under their income from other sources. Here, Lottery winnings 45,000. Income from the minor son from a special talent, it is going to be taxable in uh, the child's hand only, not in the parent's hand. Since it is earned from special talent, it is not going to be taxable. But whatever the interest which he has received from the minor's son on the deposit made out of special interest, that income will be considered for the purpose of tax, that is 10,000. And he will get an exemption of 1,500 only and only if it is other than 115 BSc normal provision. As this is under your 115 BSc, 10 subsection 32 is not allowable under section 115 BSc. Hence, 1,500 rupees not allowed as deduction. Your total income which is taxable is 70,000. And your gross total income is 3,85,000. Deduction under section 80C is not available. Hence, your total income is 3,85,000. Clear? So the next question, question number 9, in each of the following independent situation, you are required to see whether the person is required to file. These three persons are required to file their return of income or loss for AY 24-25 if their total income for the PY does not exceed the basic exemption limit. Okay, fine. The turnover of Mr. Ashish business is 65 years during the PY 23-24. So in this case, people, whenever the business income, that is the turnover, total sales or the turnover, if it exceeds 50 lakh rupees in case of business, that fellow needs to mandatorily file the return of income, no matter with regarding to his income. If his turnover exceeds 50 lakh, then he has to file his return of income. Clear? Next. Mr. Subhash has incurred a total expenditure of 90,000 towards the consumption of electricity. If the total expenditure of consumption of electricity is exceeding 1 lakh rupee, then the return of income filing is mandatory. As in this case, it doesn't exceed 1 lakh rupee, hence is not required to file his return of income. Clear? Next, Mr. Deepak, savings bank account has savings and the bank account in SBI and HDFC, and a current account in Axis Bank with opening balance of 20 lakh, 10 lakh, and 30 lakh. Opening balance of each is 10, 20, and 30. He deposited 40 lakh in SBI, 25 lakh in HDFC, and 75 lakh in Axis Bank. He has current account in this Axis Bank, current account. However, these two combined, it has these two HDFC and SBI Bank are SBR savings bank account. So in this case, even though the total income does not exceed the basic exemption limit, if he has deposited an amount aggregate exceeding 1 crore rupees in his current account and exceeding 50 lakh rupees in his savings account, anyone for the for that matter, if he has deposited so much amount, then he has to make sure that he should file the return. In this case, he has deposited only 75 lakh in current account, very well, but in savings account, 40 lakh plus 25 lakh deposit which is made in the, not the balance, people, deposit which has been made is 65 lakh, 40 lakh plus 25 lakh, hence is required to file the return of income for AY 24-25 on or before the due date under section 139 subsection. Clear? So now, Mr. Kumar, aged 50 years, has withdrawn cash of 1 crore 20 lakh during the PY 23-24 from his savings account in HDFC. Mr. Kumar regularly filed his return of income till AY 24-25. So in this case, if this fellow individual having the aggregate of the TDS and the TCS credit of how much? See here, he has withdrawn cash of 1,20,000 rupees during the PY 2024 from his savings bank account in HDFC Bank. Mr. Kumar regularly filed his return of income for AY 23-24. Since in this case, if that fellow, normally speaking, if the TDS and TCS credit is 25,000 or more during the PY, then he is required to file his return of income, even though his income doesn't exceed the basic exemption limit. In this case, the cash withdrawal which he has done is 1,20,000, that is exceeding 1 crore, 1 crore 20 lakh, which is exceeding 1 crore. You have to deduct the TDS of 2% under section 194N. 194N, for the cash withdrawal exceeding 1 crore, you need to deduct 2% excess of that. So 40,000 rupees is the TDS amount which should be deducted by the bank. So then what you're going to do is that 40,000 rupees is being deducted, which is exceeding 25,000 rupees as TDS, which should be credited in your account. He is required to file his return of income on or before the due date of 139. Clear? Now, See, try to understand this question, people. Mr. Anand, the resident Indian citizen, Indian aged 45 years, has provided you the following information for the PY24 for the PY ended 31st March 2020. He owns an industrial undertaking established in an SEZ and which had commenced operation during the financial year 1920. Total turnover of the undertaking was 200 lakh. Export turnover which is received in India in convertible foreign exchange on or before is 30th 9 2024 is 120 lakh. This industrial undertaking, this industrial undertaking fulfills all the conditions of 10AA of the Income Tax Act 1961. Profit from this industry is 35 lakh. So what have they asked you to do? You have required to compute the total income and the tax liability under section 115 BAC as well as normal provision. So first what we will do is that we will do as per 115 BAC and then we will make the computation as per the normal provisions and we will calculate the tax liability as well. Okay, we'll go one by one. This fellow, Mr. Anand, owns an industrial undertaking which is considered under SEZ and which had commenced its operations during 1920. Which has commenced its operation during financial year 1920 means calculate for first 5 years the exemption is going to be till what amount, people? The exemption is going to be till everyone. The exemption is going to be till 5 years. No, first 5 years 100%. Deduction under section 10AA is available for first 5 years 10 100%. From 6th year to 10th year 50%, exceeding that is 11th year to 15th year 50% of that profit, export profit, or your whatever amount you have deposited in that special SEZ special account, special reserve account. So here, in this case, industrial undertaking established in SEZ which had commenced its operation from 1920 in order to keep the place 1920, then 2021, 21, 22, 22, 23, 23, 24. We are in which financial year, people? We are in financial year. Sorry, we are in the previous year for the purpose of taxation. That is 23, 24. How much is available? Entire 100% is available. Okay. The total turnover was 200 crores. Export turnover which you have received money. For the purpose of you being eligible for the profits as exemption under section 10AA, the export turnover income, that is the export turnover receipt, should be bought in India within 6 months from the end of the financial year within 6 months from the end of the previous year. So before 30th 9 2024, whatever the export turnover which has been converted, money which has been bought into India is only 120 lakh out of 200 lakh. So only so much is available for exemption. Sorry, deduction. And it fulfills all the other criteria. So this 35, whatever you're recording, if this 35 is for 200, how much is for 120? It is simple cross multiplication, people. If this, just a minute. This amount of 35, whatever you're writing over here, if this 35 is representing for 200, how much is for 120 is my question. If you do the cross multiplication, you will get 21. You'll get 21 lakh. That is the exemption deduction available. Okay. So now Mr. Anand sold equity shares of different Indian companies on 14th March 2024. SAM Limited, JAM Limited, sale value is 150 and 100. Purchase price is 120 and this is 72. Year acquired is 2nd Feb 2024 and this is 16th April 2020. 17. Number of shares is 2000, number of shares is 1250 and the fair market value as on 31 March 2018 is 50. CII for the year 17-18 is given 272 and previous year 23-24 is given 348. Sale proceeds. Sale proceeds were subject to brokerage on 0.1% and the security transaction tax is also given on the cross consideration. However, security transaction tax is not considered as the expenses under your capital gain, but however, the brokerage has been considered. People, if you observe something over here, this whatever SAM Limited, whatever we are speaking about, it is short term. The asset is short term asset because it was bought on 2nd of Feb and it is sold on 14th of March within some 1 or 2 months. It is short term. This, whatever the answer which you get over here is short term, which will be taxable under section 111A, 15%. However, this jam limited, whatever we are speaking about, is your long term capital gain. That too coming under section 112A. Now we have to determine the cost separately. Now we have to determine your solution separately. You guys only tell me here. The fair market value as on 31st to 1 2018 is how much? 50. And the purchase price they have given, actual cost they have given, and the sale value they have given. Now, applying section 112 over the picture, excess of 1 lakh rupees is going to be taxable at the rate of 10% on the long term capital gain. Correct? Tax will be on excess of 1 lakh, that is at the rate of 10%. How do you determine cost for this 112A? Would be cost of acquisition or lower of the following. Lower of the following is the sale value or the fair market value as on 31st March 2018, whichever is lower, out of that you will take that amount with the cost, whichever is higher, you will consider. See now, first you will consider your cost of acquisition to be 72, or out of this point 1 and point 2, whichever is higher, correct? Out of this point 1 and point 2, whichever is higher. If you want a detailed understanding of this, you can go and watch the revision series of the capital gain. There I have explained in a very detailed sense. Okay. 72 or lower of the following of A or B. A is fair market value as on 1 the 31 1 2018, that is 15, and sale value whichever is lower. Obviously it is going to be 50. 50 or 72, whichever is higher. 72 would be considered as your cost of acquisition for the purpose of calculation. Simple. For the purpose of calculation, how much would you consider? 72. So now 72, 100. You have to just subtract this 100 minus 72. If you do, you will get 28 multiplied by number of shares. Or you can do the number of shares in together calculation and then only you can give. Clear? And in that case, you are going to get the solution. See, people, 34,875. How did you get the solution? It's very simple. You have the sales as 100. 100 minus 0.1% will give you the net sale consideration. The net sale consideration, you will get the net sale consideration, people. How much is the net sale consideration here? Net sale consideration would be 27.9. This multiplied by, that is, sorry, you will get this. How much is it going to be? 100 minus 0.1, 99.9. 99.9 minus 72 you do, you'll get 27.9. This 27.9 multiplied by 1250 shares, you please do it. You will get the solution as 34,875. However, as this is less than 1 lakh rupees, it is going to be completely exempted. It is not going to be taxable under section 112. Clear? This is going to be exempted. This is exempted. People, this is exempted and this becomes taxable. Clear? Done. Now, he made the payment of 90,000 on 1/9/2023 by check towards the medical insurance as lump sum premium for himself and his wife till 30th 9 2027. He also made the cash payments of 7,500 towards the preventive health checkup. First of all, he made this 90,000 rupees payment. No, on this date he paid. From what date till what date? Till 2027. So what does it mean? Right from 23, 24, 24, 25, 25, 26, 20, 25, 26, and 26, 27, 26, 27. From how many years till how many years? You can take the exemption. You can take the exemption for 4 financial years. And sorry, people, not for 4 years. He has taken for 5 years. That is, if you can observe over here, he has taken for 31A 2027, which is considering 27-28 also. So for how many years he has taken the exemption for? Sorry, how many years he has taken the premium for? For 5 years. So this 90,000 rupees should also be divided by 1 by 5. That is 1 year out of 5. If you divide it by 5 also, it's fine. So 18,000 rupees is the deduction which is available under section 80D for himself, for this family as a whole. 18,000 is the deduction which is available every year. This is available only for normal provisions, not for 115 BAC. Very well, fine. He received royalty of 2,88,000 from abroad from a book authorized by him in the nature of artistics. The rate of royalty 16% of the value of book, and the expenditure made for earning this royalty was 40,000. The amount credited remitted till date to India till 30th March 2024 is 2.5 lakh. So how you are going to consider is very simple. What is the total remittance that you have made, or total royalty which you have received? 2,88,000. Out of this, what is the total amount remitted to India up till 30th September 2024 is 2,50,000. The differential amount is nothing but your 38,000. Okay. So how would you consider your royalty amount? See now, how you would consider your royalty amount would be. And in case of your royalty income, people, see here the working note number three, that is income from other sources. Royalty from this artistic book is 2,88,000. Out of this expenses which is incurred already for earning this royalty income is 40,000, which is allowed as per income tax. The remaining amount is 2,48,000, which is nothing but your total income that would be taxable under the head income from other sources for this royalty income. And also you have some interest on IT refund that is also added. The total income from other sources amount is being provided. That's it, nothing else. You can check out in this working note too also calculation of capital gain. The full value of consideration is 2000 multiplied by 150 rupees. This is for short term capital gain for that matter. Brokerage has been considered. Cost of acquisition is taken simple. Short term capital gain is so much. Long term capital gain you have considered 100. Brokerage you have subtracted, and then cost of acquisition, obvious there is no indexation benefit which is given under section 112A. So the multiplication of 50 multiplied by 1250 shares has been done. You will get short term, long term capital gain. The difference between that would be 94,500. Sorry, the total of that would be 94,575. Clear? The same thing is provided over here, people. We will look into that working note one very soon. See here, capital gain, so much amount is been considered, 19,000, 94,574. Working note is also considered the same after taking the interest on income tax refund. See, he received income tax refund 15,750. Will you add the entire amount? Govinda, income tax refund amount is not been considered. Principal amount is not considered as taxable. Interest amount would be considered as taxable. That is 1,750, which is relating to the assessment year 23-24. He received the total income tax refund of 15,750. Out of that, interest amount is 750. Clear? 1,750 is your interest amount. Out of this 1,750, this is going to be taxable and the remaining amount will not be taxable. The same amount has been included. Just some few minutes back, we just saw no income from other sources. Income tax refund amount, interest on this income tax refund amount is 1,750. Clear? He occupies ground floor of his residential building and has let out first floor for residential use for a monthly rent of 15,000. He has paid municipal taxes of 30,000 for the current financial year. Very well. Both floor are of equal size. He has taken a loan from bank of rupees 50 lakh for construction of this property in 20. Repaid 2 lakh 5,000 including interest of 1 lakh during PY 23-24. And Mr. Anand deposited 1 lakh 30,000 during the provident fund. This point we'll see later. Okay, he occupies ground floor. That is, there is SOP and there is LOP as well, and has let out the first floor for use. How much is the municipal taxes he has paid? 30,000. So now for SOP and for LOP, it has been splitted as 15,000 and 15,000 rupees as the municipal taxes. So much monthly rent 15,000. 15,000 multiplied by 12 months. If you do, how much will you get? 1,80,000 minus 15,000 you do. How much will you get? 1,65,000. Out of that 1,65,000, he has paid the municipal taxes. Both floors are of equal size. He has taken a loan. 50 lakh rupees he has taken loan, and during 23-24 he has paid interest of 1 lakh rupee. Obvious, you will get 50% for this and 50% for that. Correct? 50,000 rupees you will get as deduction over here. As usual, 30% of standard deduction you will get. How much is the LOP income that you got? 65,500. For SOP, you don't have your GAV, you don't have your NAV, you don't have 30%. That's only 50,000 rupees you will get. And that So if you are under your 115 BAC, interest on self-occupied property is not allowed. It's not at all allowed. Clear? So, if you look into the point, rent received, which is taken as GAV is 1 lakh 80 minus 15,000, you got 1 lakh 65. 30% you have removed, and 1 lakh rupees is the total interest. Out of that, 50% belongs to LOP, 50% belongs to SOP. You have taken 50% relating to LOP. You got 65,500. But for this ground floor, you have considered everything. It is not at all going to be allowed. Interest on loan is not allowed in case of 115 BAC. So your total income from house property would be 65,500. Clear? So 65,500 would be a part. Mr. Anand deposited 1,30,000 in the PPF, which is allowed as deduction under Section 80C, and 80,000 in 5-year term deposit in his minor son name Aman. You're required to compute as usual under 115 BSc on so on normal provision also. First, if I'm considering under 115 BSc as usual under working note 1, just few minutes back, which we saw 65,500 you have taken. PGBP under SEZ income people 35 lakh. How did you get this 35 lakh? Under 115 BSc, Govinda, will you get 10 AA? Will not get any 10 AA. Hence, entire income is going to be taxable under section 115 BSc. Capital gain, we have already considered income from other sources. Just now we saw royalty income plus interest on income tax refund. Interest on refund. Total GTI you have got, no deduction is allowed. Total income is so much. Out of this, whatever, this amount is going to be totally exempted, not taxable. 59,700 would be subject to tax at the rate of 15%. Because it is short-term capital gain under section 111A, has to be taxed separately. You have considered. On the total remaining income, that is apart from this amount, after excluding this, you will get so much 38, 15, 250. Out of this, you exclude 3 lakh, that is 115 as per 115 BAC, up to 3 lakh it is nil. 3 lakh to 6 lakh it is 10%, 15%, 20%. On the remaining amount is going to be 30%. You will do the tax liability. I hope all of you already know to do the tax liability. I'm assuming same. And you have got the tax liability amount. And HEC at the rate of 4% you have added, and you have got the tax liability of 8,87,670. Now, with regarding to the computation of the total income and the tax liability of Mr. Anand under the normal provisions for that matter, GT as per 115 BSc you will take first, and interest on loan was supposed to be allowed under normal provision. No, allow it as your deduction. You will get GTI as per normal provision. Then under 10 AA, you will get the deduction of 21 lakh. Calculation we have already done. We are not doing it again. Clear? Then deduction under chapter 6A, ATC deduction, that is repayment of housing loan also you have. Out of 2 lakh 5,000 rupees, 1 lakh rupees was the interest which you have taken as 50,000 for SOP and 50,000 as LOP. Interest repayment under section 24B, you had 1 lakh 5,000 rupees repayment of your housing loan, principal amount. And PPF you have 1 lakh 30,000. 5-year term deposit is not allowed as it is not in his name, it is in the name of the minor son. So the total is 2,35,000. However, under section 80 CCE, it gives a maximum limit of 1,50,000. Premium payment, we have already discussed 90,000 for 5 financial year, 18,000 you have considered. Preventive health checkup up till total of 25,000. Rounding off, you can take completely. 23,000 is available. Clear? Under section that is 80 QQB, that is 80 QQB, 2,70,000 is the total amount. That is 2,80,000 out of this 2,88,000. This you have considered for 16%, but if how much is going to be maximum allowed is 15%. So 15% of this is 2,70,000 or amount which has been brought to India after subtracting all the expenses which is already allowable as deduction. The remaining amount will be allowed, considered as deduction under section 80 QQB. 15% is something which is allowed. 16% is what given in the question. We have converted that into 15% and then subtracted whichever is lower. Out of that, we have subtracted the expenses which has been deducted. So 2,50,000 minus 40,000. This calculation is what we have considered here. Whichever is lower, no. So whichever is lower means 2.5 lakh minus 40,000 you have done, and you have got 2,10,000. Clear? and your total income is 13,76,825. Out of this 112A, there is something 111A, 57,500 into 15% you have computed, and then you will do the calculation as usual, tax liability calculation, as this fellow looking into this fellow's age. You have calculated, added HEC, and this is your tax liability. Clear? This working notes, everything is there. If you need this notes, it is available in my Telegram channel. You can just get this free resources. Thank you.